Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Grant Chappell with us, and Grant is in San Diego, but he works out of Walnut Creek. So that's a very interesting combination of things. He's in the investment sales world. So Grant, it's great to have you. I'd just love to hear kind of what your history of even getting into real estate is all about.
Oh, into this crazy business. Well, out of college, spent a few months looking for work and finally landed a job with Wells Fargo out in San Leandro. And so I was working on refinances and purchases for English and Spanish speaking clients. So it was a role they were looking for. And about a year into it, I'd met now our president, James Kilpatrick, who had recently started Kilpatrick and Company. And it was exciting. It was in Oakland. He's also fluent in Spanish. He said, yeah, let's cold call together in Oakland and Greater East Bay. You'd be surprised some of the opportunities you can unlock by being bilingual. So I was 23 at the time, and that was pretty exciting. And been the same firm for 20 years. We partnered with NAI in 2011. And like all guys in the biz, you've seen your ups and downs. You've had to kind of readjust your business model in terms of, what types of deals you work on. We've all, made mistakes on working on listings that took too long to sell or didn't at all and had to pivot. But our team and company really still focused on multifamily. The last few years have pivoted into some development projects, more on the student housing front in Berkeley. That's been really exciting to see come to fruition, especially seeing Berkeley, a city, like a lot of the Bay Area that historically has been a little more NIMBY towards developers, change their tune and allow, greater height limits and whatnot near downtown. And so it's remarkable. It's almost a different skyline now with some of the new projects that have gone up.
Oh, it's totally different now. I was at Berkeley a couple months ago at the theater for a kids show, and it was just amazing to me, all the construction that's going on. You hear historically you hear about Berkeley being so hard to deal with and kind of the world of Berkeley according to their own ways, but
right, the People's Republic of Berkeley.
Yeah, exactly. But they seem to be open to development. The People's Park certainly brought some interesting response.
Yeah, I think there's like shipping containers right now acting as a barrier to keep people out if you ever drive by. Yeah.
But I mean, they're going for it.
Well, it's fascinating too. I think they realize that they need the university as their lifeblood to fund the city and basic services. And so it's sort of like almost like Jerry Brown when he was mayor of Oakland back in the late 90s up to, I think it was till 06. He had that vision of 10,000 units in downtown Oakland. And to his credit, he realized, developers, permit fees, units, that's all tax revenue. We need this for the city to grow.
Yeah, no, it's a great revenue generator for the whole city. And it's a shame that Oakland has kind of gone a little bit downhill after COVID. But anyway, hopefully it'll come back.
I'm optimistic in some regards, similar to San Francisco, where I feel like the dominoes fell there first, where there was more distressed sales on office buildings before it hit Oakland. I mean, it was maybe a year apart, but seeing deals transact anywhere from 50 to 70% off their pre-COVID peaks, naturally will lead to lower commercial rents and hopefully bring more just companies back. We're starting to see it in San Francisco. If you read the Business Times every week, AI companies and other variety of firms inking new deals because the rent's so much cheaper.
Yeah, and people are starting to kind of flock back. The restaurant owners are still suffering downtown San Francisco, but hopefully that'll pop back a little bit in the next year or two.
Absolutely.
So what are you seeing in the apartment world? You've seen prices come down. Are they starting to kind of creep back up again?
Yeah, I mean, it almost feels like there's been a reset on apartment values, where even at post-COVID, there were still a handful of groups with institutional backing that were going out, picking up apartment buildings and still doing renovations and sort of pricing it that you'd see some really high rents. And unfortunately, that model is not working right now. So you're seeing really good intrinsic value. I mean, deals around the lake, south of 200 a door, which
Wow.
feels like pricing from almost 10 years ago. And so with that, there are investors coming back, but it's finding that spread on your debt cost to what's a real cap rate. And so we were talking earlier, it feels like there's some optimism, maybe more confidence to invest post-election, even with rates not having come down as much on the debt side. Owners that are saying to themselves, is next year going to be tougher to sell? Our insurance has gone up, right? Now buyers got to factor that in. It just feels like there's always something new that's being thrown at us, but there are more deals transacting. We're seeing sales volume up, but it's really more at a much lower per unit per foot than we've seen. I said, I think in about a decade. I think it was around 2014, 2015 where we really saw the interest in Oakland pick up because rents were going up.
Right. Right. And things were perky. And as I said earlier, our two kids bought in Oakland pre-pandemic, and it was a hot spot. Temescal was the hot place to be, and
Oh
everybody
yeah.
wanted to kind of be there and have the new brewery bars and so forth. And then that all kind of fell apart.
I have a lot of good memories. I was reading an article about the Warriors a few months ago, and it kind of
Ah,
referenced when Don Nelson was their coach, and I forget that Smitty's was this bar on Grand Avenue. That was his spot, and that was 2 blocks from our first office.
oh, wow. Oh, that's interesting. So you went to that bar occasionally?
Not really, actually. Just we were walking by it. There's more like cafes and stuff during the day, during the workday, but it was this old divey spot, and that's where he brought like Baron Davis there and somebody else. This was back in the We Believe times. Like, hey, we're going to do this. Let's put a team together. But he took him to Smitty's of all places.
So you were saying that the finance side of the equation still is not coming down very much. It kind
I mean, if
of
you track the 10-year, but it doesn't mean that lenders have necessarily responded with lower spreads, right? So you'd think the quote you got a month ago should be lower today because the 10-year's down. You don't necessarily see that.
right.
I think for us too, I mean, when First Republic and Silicon Valley Bank, when they failed, that really affected our market because a lot of our clients utilize them for the banking and then for acquisitions, and they had lower rates than Chase and others. And so
Right. Yeah. Well, they were financing a lot of stuff.
yeah.
So
Although now the loans that Chase acquired, right, by acquiring the bank, there's a path to assume those often require some principal pay down. But we've done a handful of those with Chase on existing Chase loans and First Republic loans. And
oh, interesting. Huh.
the loan to value is not great, but if you can get something sub 4% for another 2 or 3 years,
Yeah.
it helps.
So you still got to put a big chunk of change down to get a loan, right?
Yes,
Yeah.
leverage is tough. And even the sales that you might see like, oh, a 7 or 8 cap on CoStar. Well, if you dig deeper and look to see who the lender was, oftentimes it's a bridge lender that the buyer's got to get for 6 months or so to lease up the building to make some basic improvements before they can put a takeout loan on there.
Right. So yeah, seems to be a lot of that going on to just try and get enough money to hold off for a little while, and then hopefully the rates will come down and get a longer term loan or sell up.
Clients like, God, like a mid 5% 5-year fix would be a gift right now.
Uh,
Really help recoup a little capital and ride this thing out for a bit.
but the big insurance companies are still not playing in the market.
It's rough. There's some players that are more competitive than, a week ago, we were trying to get a policy from one of them. They said, sorry, the customer would have to own this property for a year before we'll put a new policy on. And so we're almost underwriting north of $1,000 per unit now on
Oh
insurance.
my God.
It used to
Wow.
be like $1 a foot or $1.25 a foot.
Holy.
Even if you've done all the electrical and plumbing, well, there's still knob and tube wiring. No, we didn't replace that. We just did the breakers and the panels. And so it's
Yeah.
really tough with
Well,
these old problems.
yeah. So there's a lot of discounters out there, but they haven't really swarmed into the market that well. At least I haven't seen it that much. So anyway, the insurance world's just a crazy, wild world right now.
Yeah, and I think probably get worse before it gets better. I mean, we've had clients, especially these smaller, sub 8 units, these smaller deals that they had like a travelers or farmers policy. Now they could
Right, right.
bigger increases. We're like larger buildings, like 15, 20 plus units. That already started happening in the last 3, 4 years where they're getting dropped left and right. Zinsco panels never had a claim in 20 something years. And we had clients that I think paid off loans and just self-insured for a bit while they figured out doing the proper upgrades to get a policy.
Right, right.
They're unheard of.
Well, it gets expensive to replace those panels, and then if put in sprinklers or whatever else, it's just a very expensive proposition.
You've
But
got
going
tenants on
without
those units,
insurance,
right? That's a long project.
oh yeah, no, and getting, water and upgrade PG&E, and it's just a big mess right now.
Right.
So anyway, the insurance world is probably not going to get any better, and that's not helping in terms of making sales too. Have you had some sales kind of stymied because they couldn't get insurance?
Not personally. I know people that have. We're just looking at it week one. Even if we have a listing and I know that carrier is not going to write the new one, I'll just go ahead and try and get a quote from a couple different brokers to have that on hand. Because it's tough if you're putting the current insurance in your OM, knowing
Right.
that that's not going to match up. You've almost got to make that adjustment. Tell the owner, like, let's just do it now and take our medicines. At least we know as we're getting offers that we can expect this, to truly reflect in the cap rate.
Yeah, and you don't want to.
Negotiation that was never really there. Insurance was always sort of you get it.
Are deals retrading a lot because they start to analyze and say, we can't pay that much now?
Not as much. I mean, like everything, it's pricing, right?
Yeah.
And so we look at, for example, no one talks about days on market in commercial like they do residential.
Right,
We'll look
right.
more at, what was the closing price relative to the initial asking price and have that conversation in terms of trying to analyze a deal. Yeah, but if you have no inspection reports and it's an owner that, client that hasn't really done the proper upgrades, yeah, there can definitely be some retrades, but people tend not to offer. And the people that are really buying in this market now that aren't in trades just kind of have their heavier assumptions now. So that's why deals can sit for a while if they're not priced right before you'll actually get some players, because there's not many people really buying, Oakland and Berkeley right now unless it's a good cap rate.
So it sounds like the market is sort of stabilizing. The buyers know kind of what they're looking for. The sellers maybe don't quite know as much, but they're, getting to the point where they're getting educated enough.
Yeah, no, and just post-COVID, there really is an element of just, as brokers, we say deal fatigue.
Yeah.
For owners, there's just landlord fatigue. And I'm speaking more about Alameda County, where most of our deals are. You had eviction moratoriums, right? Where I think Oakland and Berkeley are one of the last cities in the state to finally release the moratorium. And so you had all these, units that either leave them empty because they just don't want to risk renting to someone who's going to stop paying rent, or people that hadn't paid rent in 2, 3, 4 years. And so now here we are. This is all behind us. The election's behind us. We've got a new mayor, or we're going to have a new mayor. We have a new district attorney. And so that's where it's like, okay, we've gotten through a lot. Let's sell before something else happens. I think that's
that's interesting.
I feel like people are willing to adjust their prices more, and buyers recognize like this is really good intrinsic value on deals right now.
Right. So the seller is thinking, okay, prices have stabilized a little bit, so let's get out while we can. Buyers are thinking, okay, the prices are pretty good, so let's get in. Is that kind of what's happening?
It feels like, the gap between buyer and seller's expectations is definitely narrower. Where it felt pretty wide, and it's frustrating. You look at the last 2 years of 10-year treasuries, it does these more dramatic cycles where it's lower in the winter and spring. In summertime, it's really high. Now, just this last month now, we're down in the low. The day was like 4.2%. And so if it stabilizes down there, do lenders adjust and then lower their debt costs to help, keep prices somewhat buoyant to offset lower rents, higher insurance, higher utility costs, et cetera.
Well, was Oakland, I mean, pre-COVID, was Oakland as crazy as San Francisco in terms of rents going up and prices, selling at these crazy numbers?
Yeah, so I still write an article for a landlord magazine quarterly that we look at the market, and I reference Zumper is where I go for my rent source. I know Rent
Yeah.
Cafe and others talk about it. And Oakland's fallen further, but at certain points pre-COVID, both cities were in the top five most expensive rental markets in the country.
Oh, wow.
So yes, they were both very expensive markets to rent in. Um, where I feel like San Francisco has stabilized, and if anything, if you've looked for properties there for clients or whatever, I mean, it's definitely turned around. And I also think that sellers there responded more because if you've owned there through like let's say late 90s, early 2000, you saw what a tech burst looks like. I remember it was my second apartment. I think this was 2005 in the Marina. Got it for 2,700 for a 3-bedroom with 2 buddies. I still think back to that because they were still recovering from the tech correction.
Right. Yeah.
So, yeah, but Oakland, I think the issue with Oakland is, there's more new construction, more supply delivered, like in the downtown area, Brooklyn Basin, et cetera. So I feel like it's going to have a longer road to recovery while this new supply gets absorbed. Unfortunately,
Are those big apartment buildings filling up at all?
depends who you ask, right? I mean,
Oh.
I know there's tactics of giving out 3 months free rent to fill buildings. So what are the real rents there?
Oh, yeah. Well, you get a higher rent, but you got to average it, but whatever. So you don't get into the office side of the market at all?
No, not really. I'd say like 80% of our business most years is existing rent-controlled multifamily buildings. So there's 20% will be the occasional retail or office. Typically, if there's a development play,
Yeah.
if it's like an owner-user deal for lease, we typically pass on those, refer them out. There's other agents in our company that specialize and focus on that.
So how many people are on your team?
There's 4 of us.
Oh, that's a nice group. So,
Yeah.
so do you have a couple people cold calling at all times? How do you market?
No, I mean we all cold call. I mean you have to
Oh,
do it. Oh yeah, and it's when my guys, 2 of them in pre-COVID, and then 1 joined about a year into COVID. So now that's almost 4 years with me. And it just everyone does it. The top guys in the game, everyone cold calls consistently.
everybody, how many calls you make in a day?
I mean, on a good day, like 20 to 30. I'm not,
Yeah,
I'd love to see I'm doing 50 plus calls a day, but I kind of view them as more warm calls, right? I
right.
want good quality conversations. For guys starting out, I'm like, you've really got to hit the phones. But when you're young, if you have a family, you can be there,
Yeah.
10, 12 hours a day.
What's
It's
your
those calls you make, outside of business hours on the weekend, someone picks up, bounce on that. Because you've now differentiated yourself from the market, making those calls while you're new and trying to, make a name for yourself.
Well, so not to give away trade secrets, but what's your pitch in terms of trying to get people interested?
So I learned from other senior brokers I won't name that I started doing business on the brokerage side with, and they always hammered home having information to sell. So we do enough business as a company and my team where I've always got something to talk about that we're doing. So it's sort of like activity creates activity. We just closed this sale. Here's the story about it. My wife was in the wine business for a long time. Same thing, like sales is stories, right? Having the story down, something of value on that call, and also be able to talk about local politics, what's happening in the country without, leaning too far to the right or left, just to be able to talk to them.
Right.
Because, being a landlord is kind of a lonely business. And so when you're that guy that, Grant's calling, like we have something fun to talk about, something interesting, not just doing the high pressure, you're ready to sell. Because when they are ready and they call, like I had a lady 2 weeks ago, she's like, "What you called? I hadn't heard of you since, last fall. Yeah, we were thinking about selling now. Let's meet."
Yeah.
They'll just keep making those calls without being high pressure. And that's, worked well for me. Other brokers have different tactics and some people like someone who's really pushing aggressive. So I think there's a happy medium,
Well, the commercial world, the commercial brokers have a reputation for being, hard hammer people, but I think most of the successful people I've talked to have all been about building trust and putting out information rather than trying to close the deal. So
Right.
anyway, I think that's a good way to approach things. I think people long term are much more successful that way.
Right, right. Yeah, I mean, my vision is to do this for a long time and keep the team building and still find, ways to invest here and there in projects as well with clients. And I learned that early on, just to park some money and investing on your own as well. Learned a lot by buying my first property by Lake Merritt, and it was 1906 construction, and
Oh
had it
wow.
inspected and thought, oh, I hit a home run here, and it was very time consuming. But I tell my guys that buy your first property, and then you'll understand the stress your clients are going through.
So how many units do you have now?
On our own, none actually. We sold our place, by right before COVID. And now we're limited partners in several new
Yeah.
construction projects, 3 that are under construction. We
Oh,
found
nice.
ways to get construction financing for. So call me in a year and ask me how those are doing.
Okay, well, we'll talk in 6 months, a year, and see how things are coming out of the ground. That'll be interesting. Well, so if people want to get a hold of you, Grant, where would they go?
Go to our website to nainorcal.com. You can call me at 415-246-4314. Love getting calls and texts.
All good. Yeah. So keep in touch, and we should probably have an update every 3 to 6 months and just kind of keep track of the market because that's
Likewise.
a very, very interesting market to know about.
And I would love to pick your brain more. And I'm really enjoying your podcast. I have recommended this to other friends in the business. Kind of glad I found it, later, because it feels like there's a library to pick from. Some really interesting conversations you have with people that I've gotten to know over the years in the business. So
Yeah, if you haven't listened to the Sergio Nibby brothers
okay,
one,
I'm
uh,
writing this down.
he is a character. So I don't know if you know Nibby brothers, but anyway, came out of Italy and was paid by his father $100 a week to be a carpenter, and now they're doing what, 350 million a year. So
Wow.
anyway, quite a story.
Yeah,
Anyway, all right. Well, great to have you, and we will talk again soon, I'm sure.
you got it. All right. Thanks, Bruce. Good chatting.
Talk to you. Peace out.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.